So managed wallets, you get that phrase, kind of a new thing where individuals want to effectively give another party control of their wallet and then they'll invest for them. Well, the problem is if you're doing that, you're probably triggering some licensure requirement. Bitcoin has obviously been a commodity since 2014, since the CFTC claimed it. They haven't done a lot in terms of enforcement, but technically it's a commodity. If you're managing some of these Bitcoin accounts, you're acting as like an unregistered commodities broker. Same with other coins, especially ICO tokens that are securities. If you're doing the same thing, managing a wallet, taking a commission, right, or taking a percentage of assets under management, then you're either acting as an unlicensed securities broker or you're acting as an unlicensed investment advisor. So in each case, it's problematic. So the managed wallet thing is very, very difficult to do. If you want to do it, you have to sort of change the way you work on compensation, and it's got to be a flat fee. It can't be tied to a particular transaction, and it shouldn't pool assets. The custody needs to remain with the actual customer, right? And that's the only way to do it. And you can sell, de facto data, right? Your investment advisory services, your investment picks, things of that nature. But you can't work off a commission basis. You can't work off asset under management basis because, again, in my opinion, you're looking like either a commodities broker, securities broker, or investment advisor, and you probably aren't licensed to act in either capacity. So what's the solution, right? What is the solution? Because you have all these people who want to get in, and I get where the sort of managed wallet is a good hand-holding process. Like it allows people access, right, who otherwise wouldn't, and that makes sense to me because overwhelmingly, the crypto coiners are younger people who are probably tech savvy. So, I use my father as a litmus test, right? I mean, he's 7 years old. He's not going to open an account at Kraken and start trading. That will never happen. But, conceivably, he would be one who would want to access the crypto markets in some way. So the managed wallets, while good, there just isn't a regulatory framework where you can really do that hand-holding and earn a commission or assets under management like the way you want to do it. So the solution is really, and only, in my opinion, absent having a license and being affiliated with a licensed firm, a FINRA licensed firm or an NFA licensed firm, is a hedge fund, right? I mean, you effectively have to go back to this hedge fund model, and the most base level structure for a hedge fund is really no different than what you encounter in the equity world, right? And I get this question all the time. What do I need to do? What do I need to do? Well, the simplest structure, right? The base level hedge fund structure is to create a limited partnership which represents the fund. The fund is where people invest, whether it's in crypto, whether it's in fiat. They invest into the fund, and what are they buying? They are receiving a limited partnership units, a pro rata interest in that partnership, right? They are no longer, they're not purchasing a token. They're not purchasing stock in a company. They're purchasing a partnership unit, okay? And that partnership is the conduit. The fund, through it, the pooled assets invest in cryptocurrency, whatever the case may be. How that works is that the management company, typically the fund promoter, creates a separate entity like an LLC, and pursuant to an agreement with the partnership, which obviously the fund founder sort of negotiates, drafts, and puts together before soliciting investors, they earn a return for their work managing that pool of funds or that pool of crypto. And that allows you, because this is a private transaction, this is a private partnership, this is a private offering of securities, it allows you to take a percentage of assets under management. Like in the typical equity world, it's 2% of the assets under management plus 20% of the profit of the fund. Well, in crypto, I've seen it go up to like 3-4% of the assets under management per year, plus 30-40% of the profits of that fund. And that gets paid to the management company, which is the fund promoter. So it's a very simple thing to do. You've got a limited partnership, typically a limited liability company, company, then a management agreement, operating agreement for the LLC, limited partnership agreement for the fund, and then obviously you need some sort of offering memorandum for the fund investors, because again, they're not buying tokens. It's not an ICO. What they're buying is a limited partnership unit, which is decidedly an offering of securities. Now, obviously, that triggers Regulation D and the accredited, non-accredited delineation, which I can talk. I'll hit on a subsequent video. But on the whole, right? If your objective as as wanting to be a crypto advisor is predicated upon you earning a percentage of assets under management or a percentage of profit. Absent having this license, you have to jump into this hedge fund model because it's the safest, cleanest, and probably the only truly legal way you can do it. Now, obviously, I'll acknowledge the fact that cryptocurrencies like Ripple and such, they're undefined, but the reality is that window is going to close. So, I think setting up these funds, especially if you do it domestically, and even internationally, where you use a country like Nevis or Belize, where they have very low cost for formation, you can create a very, very basic hedge fund structure. Keep yourself legally compliant, avoid acting in an unregistered or unlicensed capacity, and still do what you want to do, which is earn maximum profit. And you are allowed to take what is ultimately a very large chunk of profit plus just a straight administrative fee to sort of cover your costs associated with it. So if you're looking to open a fund, give me a call. Happy to run through it in greater detail. Until then, I'll talk to you.